Hello, everybody. Drew, aka Catching Rockets here. Um, Starting to feel a lot better, so hopefully I should be able to get through this whole video without a bunch of coughing. Um, Tonight's video, or I should say today, I guess, I don't know, um, might be a little bit boring for some people. I apologize, but we're going to go over a super important topic which needs to be discussed and which should be a top priority for every trader. And that's going to be position sizing and risk management. So let's hop into that right now. I would recommend stick around to the end of the video. I'm going to discuss something very important. All right, so let's hop into it. So position sizing, I recommend using the 2% trading rule, which basically is the 2% rule is an investment strategy where an investor risks no more than 2% of their available capital on any single trade. To apply the 2% rule, an investor must first determine their available capital, taking into account any future fees or commissions that may arise from trading. So let's say we have $1,000 to invest. So with our 1,000, we can risk 2% per trade, which equals $20. This can be done one of a few ways. One would be to buy a $1 contract with a 20% stop loss, buy two $1 contracts with a 10% stop loss, or buy a $2 contract with a 10% stop loss. And lastly, you could buy a 20-cent contract that you can allow to go all the way to zero. I wouldn't recommend going any lower than 20% on your stop losses. At 20%, you have to gain 25% to get back just to break even. 25%, negative 25%, you need to gain 33.3% to get to break even. Negative 30 is 42.9. Negative 35, 53.8. Negative 40, 66.7. Negative 45, 81.8. And where things really start to get almost unmanageable, just to get break even, negative 50%, you need 100% gain to get back just to break even. That's not even getting in profit. So very important that we cut our losses quickly and we also take our profits quickly. Risk management. To manage our risk, we should always use a 2-to-1 risk reward. So even the worst traders should be roughly 50% of the time. A more experienced trader will generally be right anywhere from 70% to 90%. So with a proper 2-to-1 risk reward, even if we're on par with the worst traders, we will be profitable. So 2-to-1 risk reward, we only have to be right 34% of the time. So for example, if we're the worst trader and only correct 50% of the time, and add 2 for every successful trade and subtract 1 for every failed trade, after 1,000 trades, we would be up $500. So that's pretty much it for that slideshow. I know this is so far going to be a very short video, but this is a very important topic. The next thing that I want to get into, well, actually, let me show you this really quickly. I want to show the importance of compounding gains. I've shown this before, I know, in other videos. But so right now we're looking at $1,000 at 2.5% interest daily for 6 months, excluding weekends. You would make $26,000 in 6 months from $1,000 if you earn 2.5% every day. Here's how it breaks down. I recommend shooting for 5% as a daily goal on your entire portfolio. But I use 2.5% because we're not all going to manage to be profitable every single day that we trade. So with 2.5%, if you get 5% 2 days in a row and then a 5% loss, you're right on par with 2.5% gains, roughly. If we extend this out and go to a year, you'll see how quickly this changes. Now we're at $629,403. And here's the breakdown for you of how that looks. So compound gains, very important. Very important to try to be consistently profitable. And it doesn't take a lot of money. When you first start out, you don't want to look at your gains. You know, like if you're trading with $1,000 account and you're making $50 a day at 5%, you don't want to be looking at those at your dollar percent or your dollar profits. You want to be looking at your percent profits. If you're consistent with that 5% every day, you're on par to do something like this. Okay? So the last thing I want to talk about has slipped my mind. Excuse me 1 second, need to cough. Oh, so the last thing that I wanted to talk about, in my opinion, the three most important things in trading, like the three things that really change trading for me, is proper account sizing, proper risk management, and just not caring. So if you're using proper account sizing and you're using proper risk management, you already know you only have to be correct 34% of the time. So every time you enter a trade, you need to be emotionless. As long as you use your, whatever you decide to use for, whatever you decide to use for your stop loss, you have to double every trade. So if you're using 10%, you need to take 20% gains. If you're doing negative 20%, you need to take 40% gains. Personally, I would suggest shooting for like a negative 10% stop loss and a positive 20. If you follow this here, buy 2 contracts and cut them at negative 10 and take profit at positive 20, you can sell one at positive 20 and leave your second as a runner and set your stop loss then at break even as at positive 20. So as long as you're following this mathematically, you can't go wrong. So why would you be emotionally invested when you enter into a trade? So I'm trying to think of like the best way to explain this, but you just really have to stop giving a fuck. You have to excuse my language, but that's really what it comes down to. If you mathematically know, if I enter this trade, whatever, let's say you're the worst trader or I'm the worst trader, 50% chance it fails, 50% chance it succeeds. If it fails, it's not a big deal because that next trade, there's same odds that I'll make that 20% gain and I'll be back to break even. And if we keep doing this consistently, you'll actually come out ahead. You'll be above break even. You'll be up 10%. But anyway, so if you keep doing that consistently over and over and over again, like you can't fail. And that's going to be the hardest part, is being consistent with your 10% stop loss and your 20% positive gain. For me personally, as a trader, once a contract goes positive, I won't let it go negative. So, you can follow this to a T, negative 10% and positive 20%. But me personally, I'll cut my contracts at negative 10%. But let's say I go positive even a few dollars, I actually put my stop loss right at like $2 positive. So that contract can never go negative. That way I'm not even risking taking a negative 10% loss. I would rather get faked out of my trade and just re-enter the trade if the breakout happens again. But that's me personally. Again, you can do this negative 10%, positive 20%. And even if you go positive 10% and then you end up cutting it at negative 10%, that's fine. Mathematically, over time, it will work. So really, once again, forgive my language. Stop giving a fuck when you enter trades. Like literally have no feelings. Don't get excited when you win. Don't get mad when you lose, or don't get sad when you lose. What I do as a trader myself is during my trading hours, I just enter my trades and I'm not attached to the outcome. I'm always shooting for that 5% gain on the day on my entire portfolio. And after I'm done for the day, it's at that point that I'll go, yes, I reached my goal. I made my 5%. Then I let myself get excited. If I take a loss on the day, I still don't get sad or mad. It's just part of the business. You're going to take losses. You're going to have losing days. When you have losing days, sit down, journal, reflect. Like write down why you took the trade, what went wrong, at what point you cut your trade, negative 10% or whatever, and what you could have done differently to avoid getting put into that situation again. And this is how we improve as a trader, is by reflecting on what we did wrong, what we did right, and what we can do better. Also journal on days where you have winning days. You want to write down all of the trades that you enter, what you did wrong, what you did right, what you could do differently. There's a possibility you did everything right and it just happened to be a fake out, and it is what it is, but still journal that and reflect on it. And again, if you did everything right and it was just a fake out, there's nothing to get upset about. Anyway, catching rockets. I'm checking out here. Once again, stop giving a fuck. Later. Much love. Bye.